So this is the score. The main credit reporting agency that all banks and lenders check is Equifax. It used to be called Vida. Before that, it was my CRA 20 years ago when I started in industry. It used to just be a 2-page report, and if you had a default, you had a default, and that was it. These days, we see reports that are 20 pages long. They're reporting every single account. They're reporting whether those payments are made on time, the total limits. It's a lot more complex than what it used to be. Lenders are learning little tricky ways to get through. So I highly recommend using a finance broker. I believe you're going to hear from Kathy afterwards. Because even if you think you know your bank really well, I mean, I haven't got my home loan with my bank because my broker told me they won't do it. We need to go to a different bank. So brokers have this wealth of knowledge. They have all the different lenders and products on board, and they'll know where you fit. Your credit score, with some lenders, they're not now even looking at credit score because this has all got too ridiculous. You've got 3 different scoring systems within Equifax. You've got a lot of people come to us. We see about 20, 30 reports a day. About half of those have just missed a couple of credit card payments. So you have lenders who just look at the negative score. You have lenders that don't credit score at all. And you have some lenders who potentially will look at your score and be very, very strict. So having a broker there is really, really helpful. It's so not the end of the day if you have a slightly low score, but if you have anything adverse, for example, like defaults, court actions, that's when it gets quite tricky to get finance or affordable finance and the best interest rates anyway. So the score ranges from 0 to 1200. Keep an eye out for your 1.1 score. So if you go and get a copy of your credit report today, you'll just have an average score. But if you pay for one with Equifax, you'll have a comprehensive score, which is all of your data, 790 in this case. And then there's 2 other scores. So you can see at the bottom there, 673 negative score. That is just the negative data. It doesn't take your repayment history information into consideration. And then you have 1.1. That's now called the Equifax Apply one. That's where Equifax thinks you're going to sit in 12 months' time. It's very important if your lender is going to be looking at that score. If that's 200 points under your comprehensive score, you may have issues. It needs to be either the same or slightly higher. So you want to, the team in credit needs to see that you're going to do better in the following months, not worse. On the right-hand side, so when you go and get your credit report, if you've got one handy, the best way to read your report to see what's right and what's wrong is not to sift through the next 20 pages. Stay on the first page. You'll see next to your score, there will be a list of score key contributing factors. We can see here, this particular person, it's just a fake example. They have great account repayment history, 2 ticks. They have a lack of consumer adverse information, 2 ticks. What they have a red box for, so is this something we can improve? Commercial credit application information. So how many commercial applications am I doing? Can I slow down a bit there and improve and protect my credit report and score moving forward? And the consumer credit application pattern is excellent. So anything that's really sticking out will be there on your list, and then you'll know, what am I doing well at? And what maybe do I need to improve on or maybe get some help with?